Financial Feature, aka BFF, to all my future millionaires out there. Hopefully everyone's doing amazing. In today's video, I'm going to give you an update on AT&T. You don't want to miss today's video, so stay tuned. And just a disclaimer, I'm not a financial advisor. This video is strictly for entertainment purposes only, and any investment may involve risk, so it's important that you do your own homework. So let's jump into today's video. So AT&T shares were up 5.2% as early this morning trading on Thursday as the company reported better than expected 1Q results. So the stock is actually doing pretty good today. It's kind of fluctuating depending on the time, but overall, because of their Q1 results, that's the reason for the pop. AT&T revenues posted $43.9 billion with a B, up 2.7% year on year. That came in ahead of analyst estimates of $42.17 billion. So they're actually beating analyst expectations when it comes to their revenue. The company adjusted their EPS, earnings per share, increased by 2.4% year to year to 0.86 cents. So 86 cents. So it's up 86 cents and top consensus estimates of 78 cents per share. So their EPS is actually up as well. Now, this is some of the main metrics that really helped them out. Their HBO and HBO Max boosted the total subscribers to 44.2 million subscribers, up 2.7 million in the first quarter, which helped boost subscription revenue by 12.6% to 3.8 billion. So if you watch any of my videos about AT&T, one of the things I was really bullish on AT&T in the future is HBO Max. I'm a true believer when it comes to HBO Max. I think HBO Max is actually one of my favorite streaming services, and I believe everything that they're doing with it is the correct moves this year, especially releasing Godzilla vs. Kong, which was a huge hit for them, even on their HBO Max, but also at the box office domestically and internationally as well. Definitely one of the biggest hits of this year and during this whole pandemic. AT&T CEO John Stankey, not sure if I said it right, is quoted as saying, "We continue to excel in growing customer relationships in our market-focused areas of mobility, fiber, and HBO Max. We had another strong quarter of postpaid phone net ads." So our postpaid phone net ads is doing really well. Higher gross ads and lower churn. And lower churn is important too because you don't want to lose your customers. You're gaining your customers and they're keeping them. And good growth in mobility, EBITDA, EBITDA. He also stated they continue to increase penetration in markets where they offer fiber, broadband, where they're quickly moving to deploy fiber. So their fiber network is doing really good for them as well. And HBO Max, like we stated before, is continuing to deliver strong subscribers and revenue growth for the company in advance of their international and AVOD launches planned for June. So this is before they offer a lower tier of HBO Max and their plans to go more internationally. So there's a lot of room for growth when it comes to HBO Max for AT&T. And this is just one of the things they're doing really well. The growth in revenue was driven by an increase in mobility and Warner Media revenue. So those things definitely helped out a lot. Now the growth in mobility revenues was fueled by higher equipment sales. So that's one of the things that's helping out their mobile side when it comes to AT&T. And the company's Warner Media division had revenues of $8.5 billion. And now that's up 9.8% year on year, driven by the rise in content, advertising, and subscription revenue. So all these things are factors on why the stock was doing well today. So they're definitely making the right moves to kind of make this company a better company. Now, as a dividend investor, these are some of the things I just want to kind of highlight when it comes to AT&T stock. In the first quarter, the company paid total dividends of $3.7 billion. Hopefully, if you own AT&T stock, you got a piece of that $3.7 billion with a dividend payout ratio of 63.5%, which I like that. I like that their dividend is still, they're still paying it. Hopefully, they increase it, but we'll see. Right now, they haven't increased it yet. But I'm happy as long as they're able to maintain their dividend. I think that's very important because they already pay a high dividend yield, so I'm okay with that. As long as they're maintaining their dividend, I'm good. AT&T expects free cash flow to be around $26 billion and expects to maintain a dividend payout ratio in a high 50% range. So that's pretty good. So I like them as a dividend company. I like where they're at. You can check out some of my other videos where I go in more depth of why I like AT&T in 2021. And these are some of the metrics that kind of help prove it. So, but we'll see. They have a long way ahead as far as the rest of 2021. But right now, I just felt like this month was especially special for them because they released 3 major movies, or 2 major movies and 1 major TV show. The Justice League Snyder Cut, which was a huge driver for them. Godzilla vs. Kong, and I believe Mortal Kombat is definitely going to help them out in the near term. What I am looking forward to is what they're going to do as far as like Q2, Q3, and Q4, what movies they have slated out, and how those are going to affect the next quarters. So Mortal Kombat actually falls, I believe, in Q2, so we'll see how that helps subscription during that time, and also the Suicide Squad 2 as well. So let me know, do you guys own AT&T? And what are your thoughts about AT&T? Leave your thoughts in the comments. Don't forget to subscribe. It really helps out the channel. And if you like dividend stocks, index funds, growth stocks, and general finances in general, please subscribe. It helps out a lot. And until next time, everybody, have a good one.